Today's session felt like a strategic deload. Light volume, clean form, and a controlled pace. S&P up 0.09, NASDAQ 0.31, Russell 2000 up 0.57, the Dow was flat. This came after 2 strong weeks of gains, so a quiet Monday? That's more like digestion. I wouldn't really call it weakness. Breadth was decent, but volume came in below average. This wasn't a breakout. This was a hold the line type of day. What's the main story? Trade. Shocker. US and China restarted talks in London. No headlines yet, but early signs point to China easing rare earth export restrictions. That's leverage. They know we rely on these inputs for EVs, defense, and chip making. But the real tension builds from here. The pause on the US reciprocal tariffs ends July 9th. If there's no deal, that could trigger more inflation pressure, just as the Fed's trying to stay patient. Speaking of the Fed, today's New York Fed consumer survey showed inflation expectations moved lower across 1, 3, and 5-year horizons. That's progress, but it's not enough to unlock a rate cut, especially when trade and deficit risks are both rising. That's why I'm watching this week's $120 billion in Treasury auctions pretty closely. It starts with the 3-year notes tomorrow. A weak auction means higher yields and tighter conditions. A strong one gives the rally some breathing room. From a macro lens, here's what I'm adjusting. I'm still cautious on M&A. CEO confidence has dropped sharply. Deal flow is drying up, and that's usually a sign that corporate leaders are bracing, not expanding. Until that trend reverses, I'm not betting on near-term recovery and risk appetite. And the same goes for emerging markets. Yes, the year-to-date numbers look amazing, but they're running ahead of fundamentals, especially with China still dragging. There's too much volatility, too little earning strength. For me, I'm just going to stay away. Sector-wise, I like utilities, stable, domestic, and critical to power demand from an AI and data center growth. I do not like consumer discretionary because it's too tied to the consumer and too exposed to tariff pressure. My final thought, today wasn't about momentum, it was about positioning. Breadth was solid, volume was light, and smart money is rotating towards stability, yield, and sectors tied to real-world demand. If you're building with conviction, not emotion, drop a like or a follow. Stay sharp, stay profitable. God bless. I'll see you tomorrow morning.